Good evening and welcome to Tips for Tomorrow in a day which has been marred by a historic judgment. The Vodafone tax case, the verdict coming out from Supreme Court, the markets remain pretty subdued, and of course a couple of sectors here and there did seem to be moving. But we have with us two very special guests, Jagannadham Thunuguntula, he's the equity head at SMC Capitals joining us from Delhi, and Raj Majumdar, CEO at Orok Investment Managers joining us from our Bangalore studios. Evening gentlemen, welcome to Profit. Let's first talk about the most recent occurrence, that's the Vodafone tax case, the implications, how do we actually look at it? I'm not talking about the particular case, but the implications for M&A deals and how the FDI interest in India could actually be impacted. Raj, did you take a look at the details of the case? Just broadly speaking, how do you think it actually dents investor sentiment when it comes to big multi-billion FDI deals in India? Jagat, what are your comments on the same? Do you think for some of the previous deals that we saw in the overseas M&A kind of an activity that we have seen, which has been building up over the last few years, do you think for some of the previous deals also this case holds a lot of relevance and perhaps they could also be opened up?
Yeah, this is a huge impact because the taxation is a very critical make or break input for any major multi-billion-dollar transaction. For example, if we see this transaction itself, it's a $11.5 billion transaction and the tax outflow is to the tune of almost $3 billion, which is a huge amount by any standards. And when the FDI and the private equity money is eagerly awaiting to come into India, this can become a very, very critical aspect definitely put together. Having said that, India has been offering a lot of growth opportunities. That's why probably the inflows may continue to happen. But this will be a very critical input going forward. However, this may not be able to. We cannot paint every transaction with the same brush. We have to see on a case-to-case basis. So each transaction may be altogether a different ball game. But this can become definitely a key input for the transaction structuring going forward.
Jagan, let's stay with you on this aspect of the M&A deals. We've actually seen a lot of overseas pharma majors being very aggressive on India. We saw the case of Abbott going ahead and acquiring the formulations business of Piramal Healthcare. Some of the other entities are also being talked about. Pfizer, for instance, the name keeps cropping up time and again as is evidence in its interest in various companies. Do you think, particularly for pharmaceutical, particularly for some of the other emerging sectors, this kind of a landmark judgment holds a lot of prominence in the way they could actually approach the Indian M&A space?
Yeah, that's right, Ashu, because but the tax incidence for a foreign party will be critical at the time of their sale, not at the time of their acquisition. For example, if Abbott purchases Piramal at the time of that acquiring time and at the time of acquisition, it may not be such a critical point as much as Abbott may be selling going forward. So because at the time of Abbott Piramal transaction, the actual party who will be need to pay the tax will be Piramal, because Piramal is actually selling. That's why the structuring aspect may happen in a more constructive fashion, because I believe in the case of transaction of Vodafone, definitely the government also has a valid point, because most of the business in case of Vodafone or Hutch was happening in India itself. There is a clear nexus with the Indian geography. That way, the government has a say. Government has a right to expect their share at the time of tax transaction as well. So going forward, it will be a very, very critical input. And as far as foreign acquirers acquiring in India, at the time it is not at the time of acquisition all this issue will come, more at the time of sale, as we've seen in the case of Kane transaction, because when Kane PLC is selling it to Vedanta, so then it will be then Kane PLC will also need to pay tax. Almost in that case it was to the tune of $1 billion.
And that might open an entire new Pandora's box if tax authorities were rubbing their hands in anticipation. Raj, talk about the IT space. Fresh concerns emanating. Ohio State perhaps banning IT offshoring was reported by one of the leading dailies. Actually, comments coming in from the management and Infosys also saying that it's actually a little negative for the entire sector. Do you think raises fresh concerns on the whole aspect of protectionism as far as the Indian IT space is concerned? Jagan, would you be selling IT sector at this particular point of time in the broader scheme of things? What's the kind of triggers that have been there? Companies have just barely managed to hold on to the margin picture. We've all seen the kind of impact coming in on account of wage hikes. And of course, on top of that, you see such kind of news development. Do you think perhaps IT is best avoid right now?
When the momentum is good, all the ships will go up, Ashu, because when the tide goes up, everything looks good. So for the traders and who want to ride the tide, I don't think there is nothing wrong in continuing to hold the IT and trade IT, nothing wrong. But for the fresh investments or the fresh investors to come in freshly, I don't think that is warranted at these valuations. But for the traders, they can simply ride the tide. Having said, and this decision by the Ohio state about not permitting the any outsourcing work, but I really wonder, in an integrated, interrelated world, is it really possible to really get into this kind of protectionist measures, and whether it really sends any good signal, so to speak. I think it may have a short-term advantage, because when the elections are around the corner in US, that's fine. But broadly speaking, I don't think these kind of decisions will take it anywhere. And we have to appreciate the fact that world is so coupled and integrated. I think this will all be temporary decisions. But in the short term, there may be some bad sentiments on the IT sector. But I think traders will take it in stride.
And let's talk about, gentlemen, Sun Pharma. Well, finally the clarity has emerged on what is the eventual route as far as Taro is concerned. Jagan, do you think definitely a huge amount of opportunity for Sun to create a global footprint? We've all known that this battle has been going on for the last 3 years now, but do you think this significantly increases the chances for a major takeover now for Taro, and subsequently Taro could start contributing in a big fashion as opposed to how they've been performing over the last few years?
Yeah, but that's right, and this judgment today is definitely a positive for Sun Pharma for sure. But there is no compulsion on the promoter family or on the Franklin Templeton really participate in the open offer. If they don't participate, the Sun Pharma's stake will remain below 50%, wherein they cannot neither get the management control nor any, so to speak, as the complete takeover advantage. But today the judgment at least given the clarity about the price, that is $7.75, barring that it is still the decision is in the hands of the in the hands of the Franklin Templeton and in the hands of the promoters. Franklin Templeton categorically said that they will not be tendering the shares at 7.75. So Sun Pharma's dream or the desire of taking the 50% plus holding may still remain, may not be still achieved. But definitely, if it happens, either of the party participates in the open offer, then Sun Pharma's stake will go up beyond 50%, and they really become a considerable player in the global scene. But in that case, they have to file to the antitrust laws for clearing for the monopolies rules and regulations, and which may delay the procedure of the deal closure for little more time.
And perhaps even eat into some of their cash, which they have. Quite a valid point. Raj, your comments on the Sun Pharma deal. You agree with what Jagan said, that perhaps price now is what they're willing to offer. The open offer price becomes all the more important, and maybe even the Levitt family may do all they can to thwart off their efforts to go in for a substantial takeover. No wonder Mark Mobius was very excited when we spoke to him about what it actually means for Templeton. So they must be rubbing their hands in anticipation that, okay, let's see what Sun has to offer as far as pricing is concerned, and perhaps that's a good opportunity for them. Raj, did you have a look at rice stocks? Very strong move on the rice stocks across the board, whether it was KRBL, LT Foods. Do you think it was just a temporary blip, largely driven by price action, and also the fact that the floods in Pakistan have actually impacted the supply side? Do you think this kind of a rally is sustainable? Or could it go the way of cement stocks, what we saw on Tuesday, one day of up move and then a big selling pressure? Or do you think there could be something in this rally that we have seen on the rice counters? Jagan, your comments? Any sustainability in this kind of a momentum, whether it's rice, cement, tea, soft commodities?
This rice aspect is most of the stocks are small caps, so one has to be real careful, because while today's fundamental news would have triggered the shares, but the bounces as well as falls can be very, very steep. The stocks are bound to be very volatile and dynamic, so one may get caught wrong at the entry points, and they may blame themselves later on. So I'll prefer rice for lunch, not for trading.
All right, Jagan, on that note, thanks for joining us. You too, Raj, on a very well animated discussion on all those aspects that we talked about. Well, that's a wrap on this edition of Tips for tomorrow. Stay tuned. The programming continues here on Profit.